Hello, this is Brad Harvey with the third quarter 2024 economic and market update. As I'm sure many of you are aware, the Federal Reserve actually cut their primary benchmark interest rates by 0.5%. We call that 50 basis points. That is a significant cut, and it ends this upward march of interest rates that we've had for the last couple of years. Inflation has certainly come down from where it was a couple of years ago. However, it looks like it's still coming in around 3% or 3.2% year over year. So let's go through the numbers for the third quarter. During the third quarter, the Dow Jones Industrial Average was up 8.15%, the S&P 500 over the same period up 5.49%, while the NASDAQ 100 was up 1.87%. The Russell 3000, which remember is an all-cap index, was up 5.76%, and small caps leading the group up 9.33%. Non-US indexes, the broad market foreign index, the large cap was up 6.73%, while emerging markets were up 7.65%. During the same period, we saw the 10-year Treasury yield falling. It actually ended the quarter at 3.80%. The Lehman aggregate rallied during the third quarter up 4.29%, and the long-term Treasury index average for zeros was up 8.88%, and long-term Treasuries, the index, was up 6.89%. REITs had a nice rally as well, which makes sense. With interest rates coming down, real estate tends to do better. During the quarter, the broad real estate index was up 16.24%. Commodities, broad-based commodities, down 4.2%. Gold, however, was up 13.04%. Oil was down 16%, and in the same time, the dollar index was down 4.83%. What does all of that soup really mean? Well, it means that the market isn't quite sure what's going on, but they're pretty sure interest rates are going to be flat to down in the near future. What does that mean for the equity markets? Time will tell. Will the Feds continue to cut rates? Probably. So if you have a lot of money market assets, you may want to be looking at extending those maturities, buying some intermediate and maybe even longer term fixed income, especially on the higher quality. I'm not a big fan of the lower quality, the high yield, the junk bonds. It's probably not a good time for those. In terms of equity valuations, if you're a long-term investor, keep those allocations. If you're a shorter-term investor with a shorter-term time frame, then we need to be careful. At best, I think the market is fairly valued. There are a lot of estimates out there that say it's actually overvalued. Get ready for this election season. It's certainly going to bring some volatility all the way around, and it's going to be good TV, I'll give you that. But this is Brad Harvey with our third quarter 2024 update. Thanks for tuning in.